Okay, so homework 1, we're going to determine the standard deduction for these taxpayers. Unless indicated none are blind, none can be claimed as a dependent on another return. So number 1 is married filing jointly, ages 59 and 42. One is blind. So we start with 27,700. I think it's more than an extra thousand. It's an extra, yeah, I'd have to actually look back and see what that is. Your additional standard deduction is on page 221. So for married filing jointly, it's an extra 1,500. So the answer to this one is going to be 27,700 plus 1,500 for a total of 29,200. Okay, number 2, Catherine.
Single age 18 earned income of 7,256, dependent on parents' return.
Yes. So what we do for a dependent is we take their earned income, add 400. But there's a minimum and a maximum. The minimum is 1,250, and the maximum is whatever the normal standard deduction would be based on their filing status, which is normally, if they're single, 13,850. So because the 7,656 falls in between those two ranges, then that's his standard deduction, 7,656. Okay. Number 3, Dan, you want to take a shot at that one?
Sure. Single, age 21, interest income 4,000, dependent on parents' return. 1,250.
Yes. Yep. Because there's 0 earned income. So even if we add 400 to that, it's less than the minimum, which was 1,250.
How do you get 20,000?
Unearned income. If they have unearned income of over $1,250, $1,250 is.
So there, remember the standard deduction for a dependent is earned income plus 400. Interest income is not earned income. So this 21-year-old has 0 earned income.
Right.
0 plus 400 is only 400, but there's a minimum and a maximum. So the minimum was 1,250. Because 400 is less than that minimum, we bump it up to that 1,250. Number 4, married. I get the easy one. Married filing separately, age 37. Spouse is not itemizing, and that's again 13,850.
Married filing separately, 72, spouse is not. Also 72, so over 65, not woman, but married filing separately, 65 or older. 2024 is 1,550.
Yeah, but for 2023, which is the rest of 1,500. So we take her normal standard deduction and add 1,500 to that.
Plus 1,500.
Mm-hmm. Okay, let's get some practice with the tax computation or tax tables. Dan, you get the next one, number 6.
$95,600. 95,600. $20,653.
Yes, that's right. Because it falls right on the boundary between two lines, it goes to the second line down. And qualifying surviving spouse uses the same column as married filing jointly. Okay, the next one is married filing jointly, taxable income $225,500. So we go to the tax computation worksheet. Married filing jointly is in section B. Looks like they're going to be in the 24% tax bracket, which is the second line down in that chart. So we go 225,500 times 24%. And then we get to subtract the correction amount, which is 13,200. So their total tax is 40,920.
$5,356.
Yep, 45,678. Yeah, that's what I got. Desiree has a net long-term capital gain from selling shares of stock. She is filing head of household and has a taxable income of $105,250. What is her maximum capital gains tax rate? I think it's going to be less than that. 257 is where it is in your book, page 257.
You're right, it is 15%.
Yeah. If you're, for head of household, if your taxable income is between 59,750 and 523,050, then capital gains rate is 15%. If it's less than the lower amount, it's 0, and if it's more than the higher amount, it's 20%. This is going to ask us to fill in some lines, but we can really just figure out what the numbers are. Byron is 37. He has an adjusted gross income of 67,350, and he's single with no dependents. So, first of all, his adjusted gross income would be 67,530. So that would be entered in here. And then next line would be his standard deduction, which would be what?
13,850.
Yeah. So we would have 67,530 minus, let's see, line 12 would be 13,850. Qualified business income deduction would be blank. So line 14 would be same thing again, 13,850. And then line 15, taxable income, would be 53,680. And then his tax on that,
7,116.
that sounds pretty good. Yeah, I get the same thing, 7,116. So that would be his tax, and that would end up on line 16, the top of page 2 of his tax return. Okay. Next scenario, Garrett is filing head of household and has adjusted gross income of 34,876. So we'd put his adjusted gross income on line 11. is standard deduction on line 12, which is, I think it's 20,800. And 13 would be blank, 14 would be the same 20,800. And his taxable income on line 15 would be 14,076. And his tax on that
$1,400.
nope, next line down. Yes, 1,480. Okay. Chris and Sarah are both 71. They were filing jointly and they have an adjusted gross income of 65,500. So again, adjusted gross income goes on line 11. Their standard deduction goes on line 12, but what is their standard deduction?
27,700 plus 2 bonuses would be over 8.
And that was 1,500 each for joint, for married.
30,700.
Yep, 30,700. And line 13 again is blank. Line 14 is the same 30,700. So we subtract 65,500 minus 37,700 to get taxable income here on line 15, 34,800. And the tax,
3,700.
yes, I agree, 3,739. Okay. So here's a tougher one, and we see this scenario fairly commonly. Number 13, Ariana is single and can be claimed as a dependent on her parents' return. She is 20 and earned $8,500 in wages and $62 in interest. So the wages and interest are both part of her adjusted gross income, which gives us adjusted gross income of $8,562. That goes on line 11. Okay, we'll make this the last one. We'll just break.
Yeah.
No. Let's see. So adjusted gross income was 8,562. That's line 11. And then your standard deduction, because you're a dependent, is right. Your earned income, 8,500 plus 400 more. So line 12 would be 8,900. Line 13 again blank. 14 be the same 8,900. But if we take 8,562 minus 8,900, we get a negative number. But the tax form tells us if it's a negative number, put 0 instead. So put 0 on line 15. And 0 income means 0 tax. Mm-hmm.
That's nice and neat.
Yeah. But if it was 8,500 in wages and 1,702 in permanent fund dividend, then it would be 8,500 plus 1,702. Standard deduction would still only be 8,900. So 1,302 would end up on line 15 as taxable income. And we'll just check that real quick. And her tax would be $131. Yeah. And so we're going to see a lot of kids owing $131 when we do the taxes in a few months.